Silver is sitting at $80, and the data currently grinding underneath this price action is something you cannot afford to ignore as we approach a critical threshold in the global physical market. This is not a celebration of a price hit. This is a tactical status report on a supply chain that is beginning to fracture under the weight of a massive structural deficit. JON CC is the archive where we look at the source code of the market, focusing on logic rather than hype, because in an environment of total manipulation, the only truth left is the data sitting in the vault reports. While the mainstream media is busy discussing interest rate pivots, the registered silver in the COMEX vaults has fallen to 88.19 million ounces, while the March open interest represents 240 million ounces. When you run the math on the current roll pace, it points to a specific timeline where the registered inventory could be effectively exhausted as early as February 27th. This is the reality that the primary exchanges are trying to mask with paper contracts, but the physical delivery demands are now becoming too loud to silence. The gap between paper promises and physical availability is the only variable that matters right now, and the ones who check primary sources can already see the bottleneck forming. We are not talking about a theoretical default, but a mechanical reality, where the roll process must continue at an unprecedented pace just to clear the March contracts without a systemic freeze. Currently, there are still roughly 200 February contracts showing sticky open interest, meaning these holders are not rolling their positions, but are instead standing their ground and demanding physical metal immediately. In a normally functioning futures market, these settlements happen without friction, but the effort required to clear them today tells us everything about the physical appetite underneath the surface. The global market is no longer a place of discovery. It is a battleground where the East is forcing a margin call on the West's empty vaults. The week opened with a wave of noise across social media, claiming that silver would crash because China was offline for the Lunar New Year holiday, giving banks a free hand to slam the price. While low liquidity periods do offer a window for concentrated selling, the expected crash simply did not materialize in the first 5 trading days of the window. We opened the week at $75.34, and we are sitting at $80 today, proving that the underlying demand is now stronger than the bank's ability to suppress it. This resilience during an Asian holiday is a major signal that the Seesaw Mechanism is no longer working in favor of the shorts. The window remains open until the 24th, but the price action we have seen so far suggests that the structural floor has moved significantly higher. The macro context just experienced a violent shift that has removed the Federal Reserve's primary escape route, as the fourth quarter GDP came in at a dismal 1.4% against expectations of 3%. At the same time, core PCE inflation printed at 3%, which is the highest reading since late 23 and far above every official forecast. This is the definition of stagflation: slower growth combined with stickier, higher inflation, a combination that historically drives capital out of paper promises and into hard assets. When the purchasing power of the currency is being evaporated at 3% while the economy is only growing at 1.4%, the math for holding cash or bonds fails completely. You can verify these numbers through the official Bureau of Economic Analysis releases. The data is public, but the implications are being ignored by the talking heads on television. Geopolitics has now reached a fever pitch as the United States has assembled its largest military force in the Middle East since the 2003 Iraq invasion. With 2 aircraft carriers, 12 warships, and elite fighter wings, including F-35s and F-22s now in position, the prediction market odds of a major strike have surged to over 60%. Energy prices are already responding to this localized risk. And as we know from Rickard's currency wars, when energy moves, the broader inflation picture is forced to follow. Financial warfare is always conducted in tandem with kinetic conflict, and the current fragmentation of the global commodity markets is the first stage of a total system reset. JON CC is archiving these movements because the synergy between military escalation and commodity backwardation is the playbook for the endgame of the petrodollar. An unusual options position has just accumulated on COMEX gold that demands your attention, with over 11,000 call contracts at strike prices ranging from $15,000 to $20,000 per ounce. For these December contracts to pay out, gold would need to roughly triple from its current position near $5,000, a scenario that points to a catastrophic tail risk event. While many such speculative bets expire worthless, the aggressive accumulation of these positions while gold pulled back below 5,000 suggests that someone with massive capital is hedging for a systemic collapse. This is not a prediction, but a data point sitting in the public ledger for those who know where to look. In a world of digital illusions, these large-scale black swan bets are the only honest indicators of where the smart money expects the world to be by the end of the year. The honest bearish case must be acknowledged because intellectual honesty is the only thing that separates a real archive from a hype channel. If a diplomatic deal is reached in the Middle East, the conflict premium could evaporate, leading to a sharp but temporary pullback in the metals complex. Furthermore, the GDP weakness could trigger a broad risk-off liquidation where equities and commodities are sold off simultaneously to cover margin calls in the debt markets. The fact that the COMEX roll pace hit its target once does not guarantee it will hold through the final March settlement window. The return of Chinese buyers on the 24th could be more measured than the market anticipates, leading to a consolidation period. However, none of these short-term risks invalidate the long-term structural deficit that is currently draining the world's physical reserves. Now, for the tape-reading portion of this archive, and I want to be precise that this is technical education based on market structure. Silver has successfully taken out the previous high from February 13th at $79, a level that had been serving as a formidable ceiling for weeks. For this move to demonstrate genuine continuation intent, price should not close back below the low of the 3 a.m. New York local time hourly candle that reclaimed that high. That specific candle is the line in the sand for the current structure, and as long as price holds above it, the momentum remains firmly with the bulls. The resistance overhead is now concentrated between $81 and $82, a zone that must be cleared aggressively to avoid a distribution pattern. If price lingers too long in this range, it risks turning a breakout into a trap for late-stage retail buyers. The 150 exponential moving average on the hourly chart is now sitting at $78, turning former resistance into what should be a solid technical floor. The question for the coming session is straightforward. Does price push through the $82 barrier and continue its march toward $84 and beyond? Or does it retrace to digest this week's massive move? The supply-demand setup is genuinely broken, and prices are going significantly higher on fundamentals alone, but the path will never be a straight line. JON CC is tracking the daily registered inventory numbers because that is the live variable that will tell the real story before the next headline hits the wires. When you see the vaults draining and the premiums exploding in Shanghai, you are looking at the end of the paper era in real time. The Shanghai Gold Exchange is currently trading at a $6 premium over Western spot prices, a disconnect that proves the physical center of gravity has moved to the east. When China returns from holiday on the 24th, they will be entering a market where exchange inventories are at decade lows and the front-month contracts are in backwardation. Backwardation is the market's way of screaming that it needs physical metal right now, and it is a structure that never appears in a well-supplied market. The fact that buyers are willing to pay a premium for immediate delivery versus future delivery is the ultimate confirmation of a physical shortage. The Western paper markets can only ignore this reality for so long before the arbitrage forces a violent repricing of the entire metals complex. The 61% probability of a strike in the Middle East is now the primary driver of the energy markets, and oil's response is the final piece of the inflation puzzle. As energy costs rise, the cost of extracting, refining, and transporting physical silver and gold increases, creating a natural price floor that the AI trading bots cannot break. We are witnessing the convergence of geopolitical risk, stagflationary macro data, and terminal vault depletion into a single synchronized event. JON CC is the only archive providing the cross-reference data between these sectors, showing you the map of the future while the mainstream media is still reading from the script of the past. The time for speculation is over. The time for verifiable data has arrived. The 30-day change in total COMEX silver inventory shows a negative 12.4% drain in a single month, a rate of depletion that would see the vaults hit zero within the year if not replenished. The recent single-session data shows another 1.4 million ounces pulled from vaults simultaneously across multiple custodians, indicating a coordinated exit by large-scale physical players. The coverage ratio of registered silver against open interest is now at a dangerously low 0.14, meaning there is only a fraction of the metal required to satisfy the outstanding paper claims. Verify these reports for yourself. They are published daily and are publicly accessible to anyone who cares to look past the headlines. The ones who check the primary sources do not need to be told that the system is failing. They can see the bankruptcy in the numbers. The psychological warfare of the Great Reset is designed to keep you fixated on the screen while the physical world is being reorganized behind your back. They want you to believe that silver is just another volatile asset rather than the primary form of insurance against a failing debt system. By the time the mainstream media admits that the vaults are empty, the price will have already gapped to a level that is unaffordable for the average citizen. This is why the JON CC mission is so critical. We archive the truth in the quiet moments before the chaos, providing the strategic blueprint for the sovereign individual. Reclaiming your sovereignty starts with understanding the difference between a digital promise and a physical asset that has no counterparty risk. The return of Asian liquidity on February 24th will be the final test for the Western banking cartel's ability to manage the price of real money. If the Shanghai premium holds or expands, we will see a massive influx of capital into the physical market that will leave the paper shorts in a state of terminal liquidation. The banks are currently using every available tool, from high-frequency slamming to artificial exchange halts, to prevent this outcome, but they are fighting against the laws of physics. You cannot satisfy a physical demand with a digital lie forever. The $13 gap we saw earlier was just the first fracture. The coming break will be total and irreversible, resetting the global financial hierarchy overnight. The final word of this archive is logic, because in a world driven by hype and propaganda, the ability to think clearly is your most valuable asset. The data is unambiguous. Inventories are falling, inflation is rising, growth is slowing, and geopolitical risk is surging. These are not opinions. These are verifiable facts sitting in the public record. Your responsibility is to manage your own risk and position yourself according to the reality of the data, not the promises of the institutions that are currently insolvent. JON CC will continue to provide the raw evidence and the analytical framework you need to navigate this transition with integrity and strength. The future belongs to those who see the truth before it becomes obvious to the masses. Stay sovereign, stay informed, and stay physical, because in the archives of history, the only currency that survives the fires of collapse is the one you can hold in your hand. The global market is resetting, the digital mask is slipping, and the physical truth is finally taking its throne. We will see you on the other side of this transition, where the reality of the vaults defines the wealth of nations and the freedom of individuals. This is JON CC, and this is the strategic archive of the end of the paper era. Thank you for watching, and remember to always verify the data before you make your move.